Everyone, regardless of whether you are an investor or not, is talking about inflation right now. Thursday morning, the May inflation numbers were released. In this video, we're going to take a deep dive into them and see what's going on. While researching the inflation numbers this morning, I saw constant misinformation, sly headlines, etc. Honestly, it was all truly sickening. Take for example this headline from the best news outlet in the world, CNBC, that says prices jumped 5% in May, but they conveniently leave out that it was 5% over the course of a year. This is all done to get an emotional response out of you and strike fear into you. They're going to use numbers, headlines, data in any way that they can that benefits them the most. Now, while the media tries to create panic and fear, we're going to focus on providing you with facts and covering what is really going on with inflation and a few things to look out for going forward. For those of you who are not familiar with this stuff, inflation is the general rise in the price of goods over time. If a can of Coke was $1 last year and now it's $1.50, there was 50% inflation on the price of that Coke can. Inflation is tracked via CPI data from the Bureau of Labor Statistics. This info is publicly available for anyone who wants to view it at BLS.gov/CPI. Now, CPI data consists of price changes to key categories of our lives, such as food, housing, transportation, etc. Now, as you have heard from Jerome Powell and the Fed, they target 2% inflation per year, year over year, to promote maximum employment and price stability. So what exactly is the main concern investors have with inflation? Well, the big worry is that rampant inflation will lead the Fed to quickly raise interest rates, causing a crash. And guys, if you could take a moment to just slap that like button real gently, please, that would be truly, really helpful with the YouTube algorithm. I've been having lots of trouble sleeping lately because I've been thinking, what if people are watching my videos and not hitting that like button? So in doing so, you're gonna help me sleep better. And with better sleep comes better videos. These are the May inflation numbers we received on Thursday. This report covers price change by category, and we can look at month to month as well as year over year data. What we're going to look at is the core inflation rate, which accounts for 79% of all inflation and excludes energy and food due to volatility, seasonality of those commodities. As you can see highlighted in orange, the 5% number that CNBC was clickbaiting you with was the total inflation from May 2020 to May 2021, exactly year over year. So the core inflation was 3.8% year over year and 0.7% month to month. When you break down the inflation by category, you notice that used cars and airline fares are only 3% of all core inflation, but are responsible for 65% of the inflation numbers we're seeing. When the virus hit last year, the government shut down the businesses and the entire economy. This caused car makers to shut down factories, leading to chip makers to shut down factories, and ultimately created a severe chip shortage for new cars. Travel across the world was brought to an absolute screeching halt, which caused airlines to furlough pilots and have fewer planes in the air. Now, people are vaccinated and ready to travel for summer vacation, and there aren't enough pilots and planes to keep up with the demand. Now, understanding the causes for inflation is extremely important. They are important because they tell us if inflation numbers are transitory or permanent. The Fed believes that the inflation we will see over the next year will be transitory inflation, lasting for less than a year. Transitory inflation happens when an event happens and causes demand to temporarily overtake supply. Long-term inflation occurs when an increase to the money supply causes consumers to spend more than businesses can handle and keep up with, even at max capacity. The Fed has made it very clear that they will not be raising interest rates for transitory inflation. But if the Fed does not see signs of long-term inflation, raising interest rates will be their key strategy. And that leads us to the big question: are these numbers transitory or permanent? I believe that the numbers we are seeing now are temporary. When the semiconductor produces the chips needed to meet new car demand, the price of used cars will stabilize. When the surge in traveling decreases and pilots get back in the air, airline fares will decrease. Nothing we have seen yet suggests that spending and inflation are completely out of control. To raise interest rates and throttle the economy because of airfare and used cars is ridiculous. But that's not what the media wants you to think. They want you to think that inflation is already here and wreaking havoc, and that is simply misinformation, which does not surprise me one bit from mainstream media. Don't get too comfortable though. While I do believe the Fed is right and inflation is currently transitory, there are some very concerning things going on that could snowball and lead to some very bad results. By the way, if you're looking to join an awesome stock and crypto community, be sure to check out our Smart Money Patreon. You're going to get the alerts that you need to gain an edge in the market. Early stage exponential ROI projects like these will be called out so you can get in before everyone else. So if you're interested in that, the link to sign up for the private Discord and Patreon is in the description, so be sure to check that out. Businesses are having some issues they are not used to right now. While unemployment numbers are still very high, there is a shortage of people ready to work at the going rate of compensation. To get people back to work, wages are growing at a rapid pace. When companies must pay employees more, they raise their prices. And when prices are raised, consumers demand more money, leading to a dreaded wage price spiral. A substantial increase in wages could turn transitory inflation into a more persistent upturn. While I don't believe we are currently seeing inflation from printed money, that doesn't mean we never will. Look at this data from Fred. Americans have all-time high savings accounts, all-time high disposable income, and at the same time are saving an all-time high amount of money. Now, a big part of transitory inflation is that demand for goods will settle down over the next year. The key questions are, how long will it take people before they feel comfortable to spend their money again? And how fast will they spend it? If spending picks up too quickly, businesses could struggle to keep up with demand, causing long-term inflation and eventually forcing the Fed's hand. Ultimately, it is important to keep a watchful eye on the inflation numbers moving forward. The US economy is in a situation we have never seen before, and there are many moving parts that will have a huge impact on how things ultimately play out. Investing based on fear is a surefire way to lose a lot of money. In times like these, remember to separate your emotions and stick to the fundamentals of investing and keep up with your strategy that makes you comfortable with your own situation. Comment below if you enjoyed this video and would like to see more videos like this in the future. Thanks for watching. Invest smart. Shia LaBeouf, take it away.
Just do it! Yesterday, you said tomorrow. So just do it!